we're going to take a look at basic payroll calculations. You'll need to gather a variety of things before you start. The first thing is a payroll register. You have a payroll register every single time we're writing even one paycheck. If our company writes paychecks every Friday, and there's 52 weeks in a year, we'll have 52 payroll registers by the end of the year. If we happen to write one paycheck on a Wednesday for someone that's leaving the company or something, then we'll have 53 payroll registers. Only the people who are getting a check get onto the payroll register for that week. We also need an employee's earnings record, and that's a schedule for each individual showing all their paychecks for the entire year. So if we have 1,000 employees, we'll have 1,000 earnings records. You'll also need to have your publication 15 and your publication 15 for the current year. You can find those on irs.gov. The example that is shown to you in this PowerPoint is a 2005, but realize that these things are basically the same, just slightly different numbers, but still they work the same as 2005. You would also need your state withholding tables for any states in which you have employees that has an income tax system. We do have an income tax system in South Carolina, so if you had South Carolina employees, you would have to have the tables for the South Carolina income tax. You can find this on their South Carolina tax website. We won't actually be doing this until we get to Chapter 4. You will need to make sure that you have your information from your various employees. And this slide shows all the different pieces and parts of information that you're going to need. Their name and address, social security number, married or single, number of exemptions claimed, the pay rate per hour or per period, the dates they started, were terminated, etc. Most of this information is going to come from the Human Resources Department. Note that in 2020, however, there's a revised W-4 form. The W-4 form is the thing that a new employee fills out as soon as they start working, the first day. And there's a new one, and so anybody who got hired in 2020 or later, or if they were an existing employee who was changing their W-4, then they have to file this new revised W-4. If they filed a W-4 in the past and there's no changes, then the employer can continue to use the old W-4. And we don't have to have everybody redo their W-4. This new form does not ask for allowances. The old one did. These allowances are no longer part of our current income tax return. And so we don't need to know those allowances for calculating out the federal income tax withheld. Instead, however, the employee's got to know their estimated income from various sources, their estimated deductions and estimated credits, and this all comes from their previous tax return. So they got to kind of know that information before they fill out the new W-4 form. Here is a picture of the old W-4 form, and so you can see the name and address, social security number, whether you were single or married. Line 5 is the total number of allowances. Now there was a worksheet you could fill out to figure out how many allowances you should claim. Basically the rule of thumb was 1 for yourself, 1 for your spouse if you're married filing jointly on your tax return, and 1 for each dependent that you were going to claim on your tax return. So married couple with 3 kids would have 5 allowances. That's the rule of thumb. So if you just use that, you would put 5 down on line 5. But you could use the worksheet and you might be able to have more allowances. The more allowances you have, the less amount of tax is going to come out of your paycheck. Now, this is the line that it no longer exists in the new W-4. Instead, they have other lines. Here, if you want extra withheld from each paycheck. So if you have extra jobs, you're married and your spouse has a bunch of jobs, you have some other kind of income that's coming in that you want this particular company's paycheck to be able to cover this other income that you got coming into the household, then you can have X number of dollars from each paycheck extra withheld if you want to cover that, so that you're not in a hole when you get to do your tax return. If you're exempt from filing income tax return, then which means that you had no tax liability last year, and you estimate that you'll have no tax liability this year. Most people do not fall under that category. But if you do, you can write the word exempt here, and no income taxes will be taken out of you. And you would sign this, etc. It can be a criminal offense if you have done this fraudulently. The number of hours each employee works during the pay period is also your information you're going to have before you can do the payroll register. This is usually found on some kind of timesheets or time cards. They may have to sign in on a physical sheet of paper. They may have to sign in some computer fashion, etc. There's going to be somewhere where the amount of hours they spent can be documented, and you'll need that information. You want to know what the start and the end of the pay period is. So a weekly pay period can start on one day of the week, and then it'll go a whole week. So it can start on Thursday and end on Wednesday of the next week. It can start on Tuesday and end on Monday. So however the company wants it. Now then they have to keep it that way. The actual pay date, the date that we're actually going to hand checks out, is not necessarily at the end of the pay period. So in other words, we might have a pay period that went from Thursday to the following Wednesday of May 18th. That's the pay period. That's the period which we're looking at the timesheets for. The actual paycheck might be handed out and dated on Friday, May 20th. That way, by the end of the day of Wednesday, all the timesheets are handed in. So now we know exactly who got overtime, etc. We got all day Thursday in the payroll department to calculate out all the checks, and then Friday mornings the paychecks would be run and could be handed out. So oftentimes a pay period ends a little bit before the pay date. Here's your basic payroll formula. We're going to take our gross wages or salaries. This includes our regular wages, which is for the first 40 hours, plus our overtime. Certain people who get salaries maybe don't get overtime, so it's just their basic salary amount. We're going to subtract out all their deductions that come out of the checks. That includes any taxes, such as income tax, federal income tax, state income tax. It includes any insurance, like health insurance and life insurance, stuff like that. Various other things, if they have to pay child support out of their check, whatever. All of those things added together are their total deductions. We're going to subtract those deductions from the gross wages to get the net pay. The net pay is the amount that we're actually going to write the check for, and we'll hand that amount to the employee on a paper check, or we'll directly deposit it to a bank account. Gross earnings, also known as gross wages. This is the amount the employee earned before any deductions were taken out. And sometimes we divide this into two different words, salaries and wages. Salaries usually indicates that the person got a flat amount. Typically, they might be management, say, and they get a flat amount per week or per month, regardless of how many hours they worked. Wages usually denote somebody that works by the hour. And they might have regular wages for the 40 hours a week. And if they had overtime hours, they would get paid overtime wages. Now, these two words are not always strictly kept to. So sometimes people will say salaries and they mean, both hourly and a flat amount. Other times people use the word wages and they mean both hourly and salary wages. So they can be interchangeable as well. Gross earnings for gross salaries determine that each of these employees worked and is entitled to their full preset amount found on their earnings record. So a salaried person, it might say that they get their full salary if they worked at least 35 hours. If they work less than 35 hours, then they have to give up some of their salary. Or a salaried person can also be set up as some overtime. So if they worked more than 42 hours, or who knows, whatever the company determines, then maybe they can get some overtime. Okay? But your job as payroll person is to make sure that they did work, they did show up, they did work, and how much of their preset salary they can get. For gross wages, we have to see each employee who is an hourly worker, how many hours did they work, and their first 40 hours multiplied by their pay rate is their regular earnings. And if they had more than 40 hours in a week, we have to calculate their overtime, and we have a separate slide for that. Then the overtime plus the regular together, wages will equal their total gross wages or gross earnings. Here's an example. If John Doe is a manager who makes a salary of $600 per week, according to his earnings record, on the payroll register for the pay period ending May of 18, that's the end of the pay period, we are writing John Doe's name, his exemption status, and $600 in the appropriate columns. Jack Riley makes $7 an hour according to his earnings record. He's an hourly person. We look at his timesheet. He put in 40 hours for the pay period ending May 18. The payroll register, we're going to put in his name, his exemption status, his gross wages of $280, which is his 40 hours times $7 an hour in the appropriate column. Payroll register will have a column for the name and allowance status for each employee. There'll be a column showing each employee's cumulative earnings. These are the gross wages that that person made from January 1st until just before this paycheck. And you'll need the current pay period's earnings that we just calculated. And so for John, we're pretending that his gross cumulative earnings from January 1st to right before this check was $12,000. And here's a picture of the payroll register with John, his exemptions, his beginning cumulative of $12,000, his current earnings.